Hey traders, just wanted to give you a quick update on a position I shared almost 2 months ago now, which was a TLT yearly covered call. So we're going to take a look at where that's sitting. Just a quick reminder that everything discussed is for educational purposes only and is general in nature. So if you remember, this was the entry point of where I got long TLT via the covered call. And initially it started to look pretty good. TLT sort of bounced back off that rising 50-day moving average. But since then, it's pretty much been down ever since. So let's take a look at where the current position is. So this is the original position. I ended up starting with a half position size of 200 shares and sold two of the August $100 calls. So you can see the shares are down about 1,500 and the covered call is up about 600, overall down about just under $1,000. Since then, I've actually added some more cash secured puts. So I'm going to continue buying if the stock drops a little lower. So the first one I sold a March $92 put. So that one's down another 500. So you can see down nearly 1,500. But to be honest, I'm not overly concerned. And I've sold another put a couple of days ago for March down at 86. So I'm just going to keep buying. If it keeps dropping, I'll eventually build to a full position of 600 shares and then I'll start selling calls against it. And if we look at the payoff diagram here, I'll roll out to March. This is what we're currently looking like. I use the March expiration for the puts rather than August just to increase the time decay. And since opening the stock position, I've had about $120 in dividends, so down about 1,300 in total. But like I said, not concerned at all. If TLT bounces back, I'll do really well. If it continues dropping, I'm just going to buy more shares and dollar cost average into the position. And I've got a little calculator here. Here's where I'm tracking the wheel position. So there was the initial trade where we bought the stock and sold the August covered call. Then in early October, I sold the March $92 put. So that one's down about $510. Had a couple of dividends, and then a couple of days ago sold another put down at 86. So you can see here overall, if I do get allocated on the full batch of 600, that'll be the capital. So you can see the current return down about 2.5% compared to down 8% for the underlying. And I was just doing a quick calculation here. This was the initial tranche. This is the second potential assignment at 92, which is currently in the money. So that is likely to get assigned, but still there's plenty of time between now and March. And there's the third tranche at 86. So if all of those get assigned, that's our roughly 55,000 in capital, but we want to take away any option premium that's been received as well, and that'll give us our potential net cost basis if it does drop below 86, which to be honest, I'll be quite happy if it does. I'm quite happy to take to have 600 shares, and that'll be my net cost basis, and that'll be my annualized dividends if all three tranches are assigned. So just wanted to give you a quick update. Obviously down on the position so far, but as I said, I'm really not concerned. I'm just going to continue buying TLT. I want to increase my exposure to bonds. So I'm happy to take assignment, initial purchase here. I'll buy some more at 92 and I'll buy some more at 86. And we'll just continue building that dividend income and selling options around that position. If I get assigned on both of these, and then TLT rallies back up to 90 or 95, I'll sell covered calls and just try to build what's called a triple income strategy where I'm selling puts, I'm selling calls, and I'm collecting dividends. So I'll keep you posted on this one. Hope you enjoyed the video, and I'll talk to you soon.